Yes, students. Now we will revise the topic of input tax credit as given in section 16 to 21 of CGST Act. And there is no separate provisions covered in IGST Act with respect to input tax credit topic. That means as per section 20 of IGST Act, whatever we are learning under CGST Act from section 16 to 21, it is same to same applicable even for interstate suppliers. Okay, sir. So before we get into input tax credit portions or the provisions, first we'll understand what is input tax. Right? Input tax is something which is paid on the inward supply of the input or input service or capital goods. Even on the capital goods, credit is available provided all these three are used or intended to be used for business purpose. And sir, what is capital goods? The value of which is capitalized in the books of accounts, means in simple, which is shown in the balance sheet as an asset, is called capital goods, guys. Like how you call fixed assets in accounts, no? Same way in GST, they are using the term called capital goods. Okay. So whatever tax we have paid on the inward supply of input, which is nothing but raw material, or the input service, or the capital goods, which is used or intended to be used for business. If I can claim the credit of it, we call it as input tax credit, guys. And input tax credit can be used against the output tax, which is payable on the outward supply. And if a person is eligible to claim input tax credit, as per section 155, it is his responsibility or onus to prove that yes, he is eligible to claim credit. And as I already mentioned, as per section 20 of IGST Act, whatever provisions we are learning under CGST Act with respect to ITC, same to same is applicable even for interstate supply. Okay, so if I have to explain with an example, just pay attention. I will just try to explain the credit concept using this example. Assume guys, supplier is making an outward supply, which is nothing but sales, on which output tax is 5,000. So the value of outward supply is 50,000. On that, GST is 5,000. So totally supplier will collect how much from the recipient? 55,000. 50,000 is supplier revenue, whereas 5,000 he has to remit it to the government. But should he pay entire 5,000 to the government is a question mark. We need to check whether he is having any credit of input tax. Okay, sir. So whatever he is liable to pay, no, that is 5,000 output tax, will appear in the electronic liability register. As soon as a person register under GST, in his GST profile on the GST portal, there will be three ledgers or register, guys, which is electronic liability register, electronic credit ledger, and electronic cash ledger. Okay. So whatever output tax is supposed to pay on his outward supply, which is disclosed in his GSTR1, will appear in liability register, which is in my example 5,000. Okay. Now let us check the inward supply. Assume the same person who is registered under GST is also taken inward supply, which is nothing but purchases. On that, he has paid input tax of 1,000 rupees. So the value of inward supply is 10,000 and assume the GST rate is 10%. So 10% of 10,000 comes to 1,000. So totally this person as a recipient. So for inward supply, he will be called as recipient and supplier will be some other person. Okay. So as a recipient, he has totally paid 11,000, which includes 1,000 GST, which we call it as input tax. Okay. Now this supplier who has supplied the goods to this person would have filed his GSTR1 and he would have disclosed that his output tax is 1,000. And automatically, as soon as he discloses it as his output tax in his GSTR1, it will reflect to the recipient, that is for his inward supply, as credit. Where, sir? In electronic credit ledger. And what is the amount of it? 1,000 rupees. And remaining, the supplier or the registered person has to pay through electronic cash ledger. And he should ensure that before he pay, he has a balance in electronic cash ledger. So this is the amount to be paid by the person after utilizing the credit, guys. So when can I utilize this credit or when am I eligible to claim this credit is what we are learning in this chapter, guys. And more about this register or ledger, I will be talking in the payment chapter, guys. I will explain there in detail about this. Got it? Yes, sir. Fine. Coming back. Yeah. So here I have given with respect to whatever provisions are covered in section 16, guys. Majority of them I have covered here. So what is it? We will see. So supplier has supplied the goods or services to the recipient, and he has given the goods or services along with the invoice, that is tax invoice, to the recipient. And he has collected GST on the supply, that is the value of supply plus GST. He has collected from whom? From the recipient. Okay, sir. And whatever amount of GST he has collected, he has to remit it to the government within the due date of GST. Okay, which is normally 20th of next month. And supplier should also file GSTR 1, or using invoice furnishing facility, he need to give the details of outward supply. GSTR 1 is the return. If he is filing it monthly, then whatever details of his outward supply, he has to give the details in GSTR 1. If in case, if supplier is following QRMP scheme, that is quarterly return monthly payment, then for whatever supplies he has made with respect to the first 2 months of any quarter, he can give the details using invoice furnishing facility. This is only when supplier has opted for QRMP scheme. Whatever outward supplies he has made for the first 2 months of any quarter, if it is a B2B supply, that is when recipient is registered, and if recipient wants to claim the credit immediately, then he can pass on the credit to the recipient by disclosing the details of outward supply in invoice furnishing facility, guys. And more about this, I will talk or I will explain in returns chapter. That is GSTR 1, GSTR 2A, 2B, everything. Okay, sir. Fine. Including IFF, which is a QRMP scheme. Fine, sir. So as soon as the supplier files GSTR 1 or give the details of outward supply in invoice furnishing facility, the credit will auto-populate to the recipient in his GSTR 2B. And there is one more statement called GSTR 2A also. 2A as well as 2B is a statement where the credit will auto-populate or will appear to the recipient. But which is more important is GSTR 2B. And what is the difference between GSTR 2A, 2B and all? We will learn in returns chapter, which is the last chapter in our syllabus. Okay, sir. Fine. Now, sir, can recipient claim the credit of whatever taxes the supplier has collected from him and remitted to the government? Yes, provided all these conditions are satisfied. So what are those conditions, sir? It is given in section 16 of CGST Act. One by one we will see. So recipient has to be registered, only then he can claim the credit. Yes. Sir, what if it is a B2C supply where the recipient is not registered? Guys, they cannot claim credit. They cannot claim credit. Why, sir? Because they are not registered under GST. If they are not registered under GST, they are not liable to pay GST on their outward supply. When there is no output tax, obviously, what do you do with your input tax? Okay. Next, for the recipient, the ITC should have been reflected in his GSTR 2B, okay, which will be auto-populated from the details given by the supplier in his GSTR 1 or invoice furnishing facility. Okay. And recipient should have actually received the goods or services. And there are few important things here. Sir, what if recipient is receiving the goods in lots or installment? There is a proviso to section 16 telling if goods are received by the recipient in lots or in installments, then recipient can claim full credit when he receives the last lot. So he is eligible to claim full credit only when he receives the last lot, guys. Okay. Now, for example, assume I have purchased 1 lakh kgs of raw material, but I am receiving in 10 lots, that is 10,000 kgs each. In that case, when I receive first lot, second lot, third lot and all, can I claim proportionate credit? No. For entire 1 lakh kgs, I can claim the credit when I receive the last lot, guys. That is the 10th lot. And as a tax planning, if I want to claim the credit as and when I receive the lot, it is better to give separate invoice. For example, for each lot, if supplier is issuing a separate invoice, then we can claim the credit as and when each lot is received, provided separate invoice is given. Whereas if one single invoice is issued for entire 1 lakh kgs, I can claim full credit only when I receive the last lot, guys. Okay. So they have told only if the goods is received or if services is received by the recipient, he can claim credit. But in case of bill to ship to transaction also. Sir, what is bill to ship to transaction? So this is like this we have already discussed even in the place of supply topic, guys. I will just repeat it. A has ordered the goods to B to deliver it to C. So physically the goods are received by C. But who is considered to be the deemed recipient, guys? A. So for the supply from B to A, where the invoice is issued in the name of A, so who is the recipient? A. But physically goods are received by C. Can still A claim the credit for it? Yes. So even though goods are physically received by C, A is considered to be deemed recipient as if he has received the goods. He can claim the credit. he can claim the credit, guys. Got it? Yes, sir. And there is one more clarification. Just a minute. There is a clarification with respect to X works contract. Okay. Assume when goods are delivered on X works contract basis, that is, when the goods are handed over by the supplier to the transporter, all the risk and rewards is transferred to the recipient. So for the supplier, the delivery of the goods is completed when he is handing over the goods to the transporter and not when goods is actually received by the recipient. Okay, this we call it as X works contract as. Now assume the supplier is Global Manufacturing Incorporation. They're handing over the goods to the transporter to deliver it to the recipient. Okay. So when is it considered to be received by the recipient is when it is handed over to the transporter. So assume the goods is handed over to the transporter on 10th January 2026 and from supplier point of view supply is completed, guys. Now the risk reward ownership is transferred to whom? Recipient. And if anything goes wrong in the transit, in the transportation, the loss is for whom? To the recipient. Okay. And let us assume the recipient received the goods on 14th February. So when is recipient eligible to claim credit? Is it on 10th January or is it on 14th February? Is the question mark. As the delivery is said to be completed from supplier's point of view on 10th January itself, can recipient claim the credit for it? Yes, guys. He can claim the credit. On what day? He is eligible to claim credit on 10th January itself, even though he has not yet received the goods physically. Got it? And if in case, if goods is lost in transit, it is a loss to a recipient people. Got it? Yes. Sure. Coming back. Next. ITC should not be restricted or blocked as per section 17. If it is restricted or blocked as per section 17, obviously you cannot claim credit. Okay. Then he or she should be in the possession of tax invoice or any other document issued by the supplier. Okay. Next, the recipient in order to claim credit. So whatever supplier has given the details of his outward supply will auto populate to him in 2B. Now even recipient will be having outward supply on which he is supposed to pay output tax. Yes. So in his GST or 3B, he need to disclose all this information, guys. All this information. Where is it? Just a minute. Whatever example I gave. Yes. So in GSTR 3B, you need to disclose all these details. What is his output tax and how much credit he is eligible to claim, and remaining whatever he is paying through cash ledger, he has to pay it and then file GSTR 3B. And then file GSTR 3B. Yes. So GSTR 3B is the return through which the recipient will be claiming the credit. And after adjusting the credit, if any amount is yet to be paid, he will pay that through cash ledger and then he will file GSTR 3B, guys. Okay, on or before the due date. Okay. Next, the input or input service or capital goods used for the business purpose to provide taxable outward supply. So it has to be used for business purpose. Sir, what if input or input service or capital goods is used for personal purpose? No credit. Sir, what if it is used in the manufacture of exempt goods? Then, if outward supply is exempt, guys, there is no credit available on inward supply. It is clearly told in the law. Only when outward supply is taxable, the credit is available on inward supply. So that is why I have told to provide a taxable outward supply. Okay, sir. Fine. And I will also just speak about the returns, guys. Just a minute. Yeah. There are mainly two returns which has to be filed under GST, that is GSTR 1 and 3B for the persons who are registered under section 9. And for the person who is following composition scheme as per section 10, anyway is not eligible to claim credit. So we need not worry about ITC there. Okay. So a registered person under section 9 will file every month GSTR 1 and 3B. Or if they are following QRMP, they will file both 1 and 3B quarterly. And if question is silent, always consider that GSTR 1 and 3B is filed monthly. Okay, if they are specifically mentioned in the question that the supplier is following QRMP, only then go with quarterly returns. Okay, so let me consider it monthly here. So GSTR 1 contains the details of outward supply and output tax. It has to be filed on or before 11th of next month. Okay, so for March, we need to file it on or before 11th April. Then GSTR 3B, whatever details has already be given in GSTR 1 will come here, along with whatever credit is appearing in GSTR 2B, no, even that will come here. Okay. So GSTR 3B will contains the details of outward supply output tax plus inward supply input tax. But the difference is in GSTR 1 we need to give the details invoice wise, whereas here we need not give it invoice wise, guys. It is just a summary. Okay, sir. So output tax minus input tax credit, remaining whatever I am supposed to pay through cash ledger, I need to pay it and then file GSTR 3B on or before 20th of next month. For example, for March, it has to be filed on or before 20th April, guys. And please be careful, whatever I am explaining is monthly. If it is quarterly, then the due dates are different, guys. Got it? Yes, sir. Okay. Then there is a proviso telling if recipient has purchased any goods or availed services on credit basis, he should make sure that he is paying the consideration to the supplier within 180 days from the date of issue of invoice. Within 180 days from the date of issue of invoice. So for example, assume guys supplier has supplied the goods to the recipient for 1 lakh on which GST is 18,000. So the total invoice price is 1 lakh 18,000. So supplier has given a credit period to the recipient to pay, but for supplier, the time of supply assume is in July itself because the supply is made and invoice is issued in July. So even though he has not received the payment, so the time of supply for supplier is July. So on or before 20th of August, he need to pay GST to the government. Yes. So he will pay out of his own pocket entire 18,000. He will pay out of his own pocket, and the details of this he has also given in his GSTR1. So can recipient claim the credit? Yes, he can claim free credit, BT credit. Okay, sir. Even though he has not paid any amount, the amount has been paid by supplier and he has given the details of outward supply assuming GSTR 1. So the credit will auto-populate to the recipient in GSTR 2B. He can claim the credit. So he has claimed full 18,000 credit. If we pay the amount to the supplier within 180 days, no problem. We will not disturb him. But if recipient fails to pay to the supplier within 180 days from the date of issue of invoice by the supplier has issued the invoice and within 180 days the recipient has not paid. In that case, the recipient, if he has already claimed credit, he need to reverse it. Entire 18,000, he needs to reverse it. So after the expiry of 180 days, whatever BT credit, free credit recipient has claimed, he has to reverse it. He has to reverse it. In which return, sir? After 180 days period expires, whichever is the next GSTR 3B you will find, in that he need to reverse the credit which he has already claimed with respect to this supply, which is 18,000 in my example. Okay. Sir, what if recipient has paid proportionately? For example, out of 1 lakh, he has paid 50,000 to the supplier. Sir. Then what is the unpaid amount? 50,000. On that GST comes to how much? 9,000. So in that case, recipient has to reverse only 9,000. So whatever is the GST amount which is not paid on the value which is not paid, I repeat, whatever is the GST amount on the value which is not paid by the recipient to the supplier within 180 days from the date of issue of invoice has to be reversed by the recipient. Reversed means simple. After 180 days, whichever GSTR 3B is filing, in that already output tax is there. Yes. For that, you add back this credit, whatever he has to reverse. So automatically his output tax will increase, guys. Clear? Yes, sir. But this 180 days concept is not applicable in few cases. I have given the exception here. You can see. Exception is when RCM is applicable. Okay, first of all, before this, sir, when RCM is applicable, the recipient has to pay tax himself. Can he claim a credit of it? Yes, it is an input tax for him. He can claim the credit. So for whatever taxes a recipient has paid, whether the supply is taxable under FCM or RCM, for recipient it is an input tax, he can claim a credit of it. So even if it is an RCM under which the recipient himself has paid the tax to the government, can he claim a credit of it? Yes, as it is an input tax. Okay, coming back to this. So within 180 days, if supplier has not paid, then he need to reverse it. And while reversing, it is along with interest at 18% per annum. From the date on which the recipient has claimed free credit till the date he reverse and pay to the government, the ITC amount has to be added back along with interest at 18% per annum. So interest will be from what date to what date? From the day it is claimed by the recipient till the date it is reversed and paid. Okay, sir. But this 180 days limit is not applicable in the following cases. When is it? RCM, that is reverse charge mechanism, because here recipient himself will pay the tax to the government, only then he can claim the credit. So obviously, in that case, 180 days concept is not applicable. Whether the recipient pay to the supplier or not, the value doesn't matter, because the government has received the amount, only then they will pass the credit to the recipient, guys. Okay. Schedule 1 cases, that is, there are 4 activities, even without even without consideration, it is a supply, as per para 1, 2, 3, 4 of Schedule 1. In that case, recipient is not paying anything because there is no consideration, but still it is considered as supply, and the value will be fixed as per the valuation rules. Yes. And in that case, is GST be levied? Yes. But as there is no consideration, there is no point applying this 180 days there. Got it? Yes. Then addition made to the value of supplies as per section 15 subsection 2 clause B. That is, the liability of the supplier is paid by the recipient to a third person. Assume I am the supplier, you are the recipient. I was supposed to pay 10,000 to a third person, which I asked you to pay it. So have you already paid it? Yes, to the third person. So for the value which we need to calculate for my supply, should we add this 10,000? Yes. But can we consider that, oh, within 180 days, recipient has not paid to the supplier, so we need to reverse the credit? No, 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 guys. As it is already paid by the recipient to the third person, that is why we are adding it to the value of supply between the supplier and recipient. So even though this amount is not directly paid by the recipient to the supplier, it is as if you have paid me. It is as if you have paid me. Even in that case, this 180 days would not be applicable. Got it? Yes. So, fine. Now coming to, so whatever is covered in subsection 1 as well as subsection 2, we have learned, guys. And under subsection 2, there are number of conditions. If all the conditions are satisfied, only then recipient can claim the credit. Sir, what if one condition is missing? No credit. Okay, fine. Then coming to subsection 3, connected to income tax also. If depreciation is claimed on the tax component, that is GST component, of the cost of capital goods and plant and machinery under the Income Tax Act, the ITC on the said tax component will not be allowed. So in simple, I have drawn a chart here. Let us understand. If GST is paid on the purchase of capital goods or even plant and machinery, first check is ITC claimed. If ITC is available, if it is not blocked as per section 17, claim it. So if ITC is claimed, then you cannot add that GST amount to the actual cost of an asset to add the asset to the block. So whenever an asset is purchased and put to use during the previous year, we will calculate the actual cost of an asset as per section 43 subsection 1. No. Yes. So for GST paid on the purchase of capital goods or plant and machinery, if credit is available, then that GST component will not be capitalized for income tax purpose. So that means no depreciation on the GST component. Okay, as you already got the benefit under GST. Sir, what if credit is blocked or not claimed? In that case, the GST amount can be added to the actual cost of a capital asset, which will be used for the business, and it will be added to the block on which depreciation can be claimed over the useful life of the asset, guys. Got it? So on whatever GST is paid on the purchase of capital goods on plant and machinery, either you can claim credit or you can add it to the actual cost of an asset as per Income Tax Act, but not both. And this 43 subsection 1 talks about the actual cost calculation for claiming depreciation as per section 32 in income tax under the PGBP head. Got it? Yes. So I will just try to explain this with an example. Just a minute. Assume, guys, I have purchased a capital goods or plant and machinery for 10 lakh plus GST on that is 18%, which is 1 lakh 80,000. So the total cost for me is 11 lakh 80. Okay. Now for income tax purpose, assume the actual cost we have taken only 10 lakh. In that case, can I claim the credit of 1 lakh 80,000? Yes, I can claim the credit of 1 lakh 80,000 under GST. So for income tax purpose to claim depreciation, what is the actual cost? Only 10 lakh. Okay. Now assume in income tax, I have considered the actual cost is 11 lakh 80,000, which includes GST also. In that case, can I claim the credit? No, I cannot claim the credit. Is that clear? Yes. So, sir, what is more beneficial? Guys, whenever you purchase any capital goods or plant and machinery, first check whether credit is available. If yes, that is more beneficial, claim the credit because you will get the immediate benefit. Claim the credit, but don't add GST component to calculate actual cost for income tax purpose. Okay. Sir, what if by chance if credit is not available? Assume the GST credit is blocked under section 17, or it is not available because the assessee has not satisfied any one of the conditions given under section 16. In that case, you can add it to the cost of an asset under income tax to claim depreciation. So always, whenever you purchase any capital goods or plant and machinery, first thing you will check is whether credit is available under GST or not. Accordingly, decide the treatment, guys. Got it? Yes. And whenever assessee as a credit, he can avail it within the following time. As per subsection 4, the deadline to claim credit, deadline, it starts with the D. D is the fourth alphabet. So subsection 4. Yes. A registered person shall not be entitled to take input tax credit after, means this is the deadline, maximum deadline to claim credit. Ah, so that is 30th November of the following financial year, that is next financial year, or the actual date of furnishing of relevant annual return, that is GSTR 9, whichever is earlier. Got it? Yes. Assume the invoice date fall in any month of this financial year. So for this invoice, whatever credit is available, you can claim maximum within 30th November of next financial year, or the actual date of filing the annual return for the current year for which the invoice relates to, whichever is earlier. And if by chance if this date is not given in the question, because it is subjective, it will vary from person to person. If by chance if this date is not given, then you can straight away consider 30th November of next financial year. And please be careful, guys. What they have told here is actual date, not due date. The due date to file GSTR 9 is 31st December of next financial year. But they are not talking about the due date, they are talking about actual date, which is subjective. It will vary from person to person because different persons might file the returns on different dates. Got it? If it is given in the question, well and good. You take, compare with both and take whichever is earlier. If in case, if this is not given, straight away go with 30th November. Got it? Yes. Then coming to subsection 5, it is not relevant as on today, so you can just ignore it. And coming to subsection 6, guys, it has a connection to section 29 and 30. Section 29 talks about the cancellation of registration, and section 30 talks about revocation of cancellation of registration. So as it has a connection to section 29 and 30, which we will learn in registration topic, I will explain subsection 6 when I cover section 29 and 30, guys. Is that clear? Yes. So you can just write it here, read with section 29 and 30 in registration chapter. Got it? Yes, sir. Okay. Next, coming to rule 37A. I will try to explain this with an example. Just a minute. Yeah. Okay. Assume, guys, the supplier has supplied the goods or services to the recipient in Jan 2026, and he has collected the tax from the recipient and he has filed GSTR 1 for Jan, which is in February. Okay. He has already filed GSTR 1 for January, and accordingly for recipient the credit was auto-populated in GSTR 2B, or it was reflected in GSTR 2B. Now they were using the word auto-populated, but recently they have amended and they have removed the word auto. Okay, they have just told GSTR 2B is a statement. But anyway, it will be auto-populated even today in the real world. Okay, I will explain that when we are covering returns topic, guys. Okay. So supplier has filed GSTR 1 for January in February, and the credit as reflected in GSTR 2B to the recipient, and recipient claimed the credit. But supplier didn't file GSTR 3B for January, which he was supposed to file on or before 20th February. He didn't file it. Okay, no problem. No problem till when? Till 30th September of next financial year. So, supplier filed GSTR 1, but he didn't file GSTR 3B for January. So, recipient has also already claimed credit because all the conditions were satisfied. Oh. So, if supplier didn't file, actually the due date to file GSTR 3B for January is 20th February. But the government is telling as per rule 37A, wait till 30th September of next financial year. If supplier has not filed GSTR 3B till 30th September of next financial year, then recipient, whatever credit he has claimed, he need to reverse it on or before 30th November. He need to reverse it on or before 30th November of that year, guys. So he has 2 months time to reverse the credit. And if he reverse the credit within 30th November, then there is no interest for it. Only GST component he need to reverse. So for the default of supplier, they are punishing recipient. So automatically what happens, recipient will push the supplier to file his pending returns. So by doing this, they're actually disturbing the supplier's business. because whenever the credit is denied or has to be reversed by the recipient, maybe he will not go forward to enter into a transaction with the same supplier again in the future. So if supplier doesn't comply with the GST provisions, they may disturb his business by asking the recipient to reverse the credit cards. Okay, sir. So if recipient doesn't reverse the credit within 30th November, he has to reverse it even if it is later. But from 1st December, interest will start at 18% per annum. So from 1st December, if you delay further to 30th November, then from 1st December, he has to reverse it, but along with the interest. So interest will start only from 1st December. Got it? So if you reverse it within this time, only credit he has to reverse, no interest. Because anyway, Papa, he has not done any mistake. Got it? Yes. But sir, what if later? Assume the GSTR 3B for January was not filed by the supplier till 30th September. So Papa recipient reversed the credit before 30th November. But later, whatever is the pending return by the supplier for January, GSTR 3B, assume he somewhere filed it in March 2027, he filed it. In that case, recipient can re-avail the credit. Recipient can re-avail the credit. Whatever he reversed it before 30th November, he can re-avail that. If GSTR 3B is filed by the supplier later, guys. Got it? Yes, sir. And to re-avail the credit, whatever time limit we discussed, under section 16(4), that is not applicable. This is only for availing the credit for the first time. After availing the credit for any reason, if recipient has reversed it, and even for this purpose, that is, if he has not paid within 180 days, later if he pays it, assume after 180 days he paid. So after reversing the credit, he paid the amount to the supplier. Can he re-avail the credit? Yes, he can re-avail the credit. But for re-availing the credit, this time limit is not applicable, guys. Okay, yes. So that is what is given in rule 37A, guys. This is only for the mistake or default of supplier by not filing GSTR 3B. The recipient will be punished by reversing the credit. You need to reverse the credit. Is that clear? Yes, sir. Fine. We'll move forward. So we are moving to section 17. Section 16 is completely done. Then 17, guys. Below is the list of situation when input tax credit will not be available. So section 17 talks about apportionment of credit or blocked credit. Oh, guys, we already learned that the input service or capital goods, which is taken as inward supply, has to be used for business purpose. Sir, what if it is used for personal purpose? No credit. Sir, what if it is partly business, partly personal? Then whatever is attributable for business purpose, only that much credit can be used or claimed. For example, assume GST paid on the purchase is 10,000 and the inward supply 50% is used for business, 50% for personal. In that case, only 50% of 10,000, that is only 5,000 credit can be claimed. Okay, yes. Next, subsection 2. Subsection 2 and 3 has to be read together. What is subsection 2? Where the goods or services or both are used partly for affecting taxable supply, including zero rated supply. Even zero rated supply is considered to be a taxable supply, and partly for affecting exempt supplies. The amount of credit shall be restricted to input tax as is attributable to the taxable supply, including zero rated supply. Okay. So before I explain this, what is zero rated supply is given in section 16 of IGST Act. We will learn it. I had kept it pending. Come to this page. Okay. In the bottom, I have given in page number 50. Yes. Zero rated supply, section 16, subsection 1 of IGST Act. Zero rated supply means any of the following supplies of goods or services or both, namely, export of goods or services or both is always zero rated. And next one is supply of goods or services to special economic zone developer or special economic zone unit is a zero rated supply, guys. I'd already mentioned it number of times. For GST purpose, SEZ is considered to be a location outside India. So anything going to them is at par with export, guys. And for GST, we treat it as zero rated supply. Okay, sir. So just a minute. Yeah. So if you take you can see SEZ unit or SEZ developer is there, and for them registration is mandatory as per GST. Okay. If there is any supply to SEZ unit or SEZ developer, means for them it is inward supply. It is interstate supply as well as zero rated. Whereas anything supplied by them, which is an outward supply for them, is interstate supply but not zero rated. And this is at par with import. If we are taking any supply from SEZ unit, it is at par with import, guys. Is that clear? For SEZ unit or developer, it is outward. Whereas for the receiver, it is inward. At par with import. Got it? Yes, sir. And if outward supply is zero rated supply, credit is available. Credit is available, guys. Yes, just a minute. Okay. Yes. Now, assume an outward supply is exempt supply. Sir, is credit available? And exempt supply includes nil rated, wholly exempt supply, and non-taxable supply, guys. As per section 2, clause 47, which defines exempt supply includes all these three. Okay. So if outward supply is exempt, then there is no credit available on inward supply. Okay, sir. Same way, if outward supply is taxable, including zero rated supply, is credit available on inward supply? Yes, credit is available. Yes, credit is available. Next. Sir, there is a common input or input service or even capital goods which is used in the manufacture of two goods, sir. I am manufacturing two goods. One is G1, the other one is G2. G1 is taxable supply and G2 is exempt supply. And this input, whatever I am purchasing, I am using for both these outputs. Can I claim full credit? No. Whatever is attributable to taxable outward supply, only that much credit I can claim. This is only when same input is used for the manufacture of two goods and one is exempt, one is exempt, one is taxable. That is where the confusion arises. If both are taxable, full credit is available. If both are exempt, full credit not available. But one is taxable, one is exempt. So proportionate credit has to be claimed, whatever is attributable towards taxable outward supply. Okay. I've just given one example here with numbers. Assume, guys, there is a common input which is purchased to manufacture two goods, FG1, FG2, finished goods 1, finished goods 2. Finished goods 1 is taxable, whereas finished goods 2 is exempt, which is an outward supply for me. Okay. So what is the GST paid on the common input used in the manufacture of both these goods is 50,000. Total GST paid on common input, which will be used in the manufacture of both these goods, is 50,000. I have paid GST of 50,000. Okay. So turnover from FG1, which is taxable, is 2 lakh, and turnover from FG2, which is exempt, is 1 lakh. So what is the total aggregate turnover? 3 lakh. So can I claim full 50,000 credit? No. So out of 50,000, whatever is attributable towards 2 lakh, only that much credit I can claim. So how is the calculation? Simple. 50,000 divided by total turnover into taxable turnover, which is 33,333. Only this much credit can be claimed. So remaining, that credit cannot be claimed. So 50,000 minus 33,333 cannot be claimed, guys. Got it? Which is simple, but which is simple, like the credit which is attributable towards exempt supply is not available. Got it? Yes. So if you want, you can see whenever I am giving any example, you guys, if you want more understanding, just pause and go through it. You can just observe it. Okay, fine. I will move forward. Yeah. So subsection 2, and please be careful for subsection 2 purpose, outward taxable supply includes even zero rated supply, because zero rated supply is considered to be taxable, but rate is zero rated. So output tax might be zero, but still, when my outward supply is zero rated, on my inward supply is credit available? Yes. So even zero rated supply, when it is outward, it is considered to be a taxable outward supply, guys. Okay. And subsection 3 is only for subsection 2 purpose. What is it? Guys, here they try to inflate your exempt turnover so that the amount of GST credit what you claim will come down. So they will try to increase this as per subsection 3 for subsection 2 purpose. So this calculation we will do as per subsection 2, right? Yes. And actually this calculation is given in the rules, and that rules is not a part of your syllabus. You need not worry. I've just given an illustration here for better understanding. Sir, will they ask any calculations like this in the exam? No, guys, because this calculation is actually given in the rules, and that rule is not a part of your intermediate syllabus. Okay. So in subsection 3, they are telling for subsection 2 purpose, what exempt turnover will include? They are trying to include few things more. What is it? Subsection 3. The value of exempt supply under subsection 2 shall include. This is only for subsection 2 people. Only for subsection 2 purpose, not for the entire act. Oh, what is it? Supplies on which recipient is liable to pay tax on reverse charge basis. So, if my outward supply is taxable under RCM, they are telling for me, consider it as exempt supplies. It is taxable actually, but under RCM. But they are telling for supplier, consider it as exempt supply. Then transaction in securities. Actually, securities is neither the goods nor the services. That means it is not at all covered under GST. But still, they are asking you to cover here. Then the last one is sale of land and sale of constructed building, which is a part of Schedule 3. There are a number of items in Schedule 3, but they have covered only one item in Schedule 3. Got it? Yes. So all these three has to be included in the exempt supply guys, so that your exempt turnover will increase and accordingly the amount of credit which a person can claim will get reduced. That is the strategy played by the government. And subsection 4 is actually there with respect to banking company and all, but it is not a part of your syllabus. Okay. Input tax credit is available only on those goods and services which is used for business. Exports and supplies to SEZ fall under the category of what? Zero rated supplies. ITC is available on zero rated supply and taxable supply, but not on exempt supply guys, which I already explained. Okay. Now coming to 17 subsection 5, which is important guys. There are number of credits or number of situations when the credit is blocked or restricted. When is it we will be learning? And here I have differentiated by color guys. Wherever I have given in green, that means in the such case credit is available. If I have highlighted anything in red, that means in such case the credit is not available. I repeat, red means no credit, green means credit is available. Got it? Yes, because there are chances that students might get confused here. So that is why I have differentiated by color. Okay, let us begin. Pay attention. Look here, look here. Input tax credit shall not be available in respect of the following, which are namely, first one, clause A, 17.5a. Try to remember in the order. I have given it in the order of the sections or clauses, guys. Okay. Motor vehicle for the transportation of persons. Means if it is for the goods, allowed on? Yes. So for the transportation of persons, having approved seating capacity of not more than 13, means less than or equal to 13. Sir, what if it is more than 13? Means bus. Credit is available, provided it is used for business purpose. Yeah. Okay. So what is covered here is not more than 13 means maybe car. Okay. Including the driver. Okay. Not more than 13, including the driver. Except when they are used for making the following taxable supply. Means in the following cases, credit is available. Okay. When is it, sir? If it is for further supply of such motor vehicle, for example, I have purchased the car to further sell it, credit is available. Okay. Next, for the transportation of passengers. Guys, passenger is different, employees is different. Assume I have purchased a car to use it in my business. My business is to provide transportation services to the passengers. Means my customers. So is credit available for me? Yes. Next, imparting training on driving such of motor vehicles. Assume I am running a driving school. So I have purchased any car whose sitting capacity is less than or equal to 13. Sir, is credit available? Yes, credit is available. Okay. Fine. Hope you understood. If motor vehicle is purchased for transportation of persons and if seating capacity is less than or equal to 13, credit is blocked. But if it is used for the following purpose, credit is available. Okay, sir. Next. So motor vehicles done. Next, vessels and aircraft. Vessels or aircraft, except when they are used for. Means if it is used for the following purpose, credit is available, guys. Okay. Means if it is used for any purpose other than this, credit would be blocked. Okay. Here, assume motor vehicles is purchased. Assume a cab or a car is purchased by a company for using it for pick and drop of employees, like cab facility. So will employees fall here? No, no, no. In that case, credit is not available. So what if it is a bus which is used for the transportation of employees? Credit will be available because seating capacity will be more than 13. Here credit is blocked only if it is not more than 13. If it is more than 13 and if that bus is used for business purpose, even if it is for the transportation of employees, credit is available, guys. Got it? Yes. Vessels and aircraft, except when they are used for, means in the following cases, credit is available, which is same like for motor vehicles. For making the following taxable outward supplies, namely for supply of such vessels or aircraft, means I have purchased, assume vessel, to further sell it. On purchase, whatever GST I have paid, can I claim the credit? Yes. Next, transportation of passengers or imparting training on navigating such vessels, that is the training of the navigating the vessels. Vessels is nothing but ships here. Imparting training on flying of such aircraft, that is pilot training. Credit is available. Even if it is for transportation of goods, if you have purchased any vessels or aircraft, credit is available. Is that clear? Yes. So clause A and AA talks about if you have purchased motor vehicle, vessels or aircraft on which you have paid GST, credit is blocked. But if you are using it for the purposes which I have highlighted in green color, credit is available. Credit is available, people. Yes. I will just show you a few examples which I have given in my provision book. Just a minute. Have a look into it. Just a minute. Okay. So if you also have my provision book, you can just open. If not, you can just pause the video and look into it, guys. So these are the examples for 17.5 clause A. So please pause the video and go through it. Simple examples I have given. Okay. Next, for AA, I have given two examples. Even that you go through. This is for AA, vessels and aircraft. Okay. Now I will go back. Next, AB. Guys, on purchase of motor vehicle, vessels or aircraft, if credit is not available, then if I have taken any general insurance, services, repairs and maintenance on which I have paid GST, even in on that whatever GST has been paid, credit is blocked. Credit is blocked. So in simple, just a minute. Okay. Let me explain you. Okay. Now assume a registered person has purchased motor vehicle or even a vessel or aircraft, any one of this. On purchase of any of this, if credit is not available as per section 17(5)(a) or AA, then for this motor vehicle, vessels or aircraft, if you take any insurance services, repair service or maintenance service on which he has paid GST, credit is not available as per section 17(5)(ab). So if on purchase, if credit is blocked, even for the services, whatever is taking, credit is blocked. Sir, on purchase, if credit is available, then on the services also, is credit available? Yes. So credit on the services depends on the credit on purchases. Hope you got it. Yes, sir. Fine. Let me read it. Services of general insurance, servicing, repair and maintenance insofar as they relate to motor vehicles, vessels and aircraft referred to in clause A or AA. Okay. Means we are taking services for whatever we have purchased above, that is motor vehicle, vessels or aircraft. But credit is available if it is used for the following purpose. What are those? Where the motor vehicle, vessel or aircraft referred to in clause A or AA are used for the purposes specified therein. For the purposes specified therein means whichever I have highlighted in green color. So if it is covered here, on purchase credit is available. In such case, even for the services, credit is available, guys. Okay, sir. Next. Were received by a taxable person who is engaged in the manufacture of such motor vehicles, vessels or aircraft. So assume I am a Tata Motors who is engaged in the manufacture of motor vehicles. If I take any of these services, is credit available for whatever GST I have paid on these services? Yes, credit is available. Even if I am a manufacturer of vessels or aircraft. Next. If it is taxable person is engaged in the supply of general insurance services in respect of such motor vehicle, vessels or aircraft insured by them. So if recipient is engaged in the business of general insurance, if they have taken any of these services on which they have paid GST, credit is available. Sir, what if general insurance business is taking general insurance? Is it possible? Yes. What if it is reinsurance? So there is a possibility. Yes. And normally this general insurance services, whenever there is any damage of vehicles, they will get it repaired, for which they will take these services, on which they were liable to pay GST. And whatever GST they pay on the services which they are taking or which they are taking, can they claim the credit? Yes, they can claim the credit, guys. They can claim the credit. Okay, sir. So even for this, I will just show you some examples. Just a minute. Yeah, these three examples. You can just please pause the video quickly and go through. Yeah, I will move forward. Coming to clause B, there are a number of items covered here. Guys, if any of this is taken as inward supply on which GST is paid, credit is blocked. Credit is blocked. What are those? The following supply of goods or services are both, that is food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircraft referred to in clause A or clause AA except when used for the purposes specified therein. Okay, listen here. So we already learned if motor vehicle or vessels or aircraft is purchased, on purchase if GST is paid, it is blocked. But if it is used for the following purposes, credit is available. Sir, what if I don't have so much money to purchase? I am taking motor vehicle, vessel or aircraft on rent or on lease. So I am paying a rent amount. And on that rent, I am paying GST. Can I claim the credit? No, it is blocked. It is blocked. That means when you are taking the vehicles on rent, guys. Okay, na? Yes. But if it is used for the following purpose, is credit available? Yes. So whatever motor vehicle you are taking, whatever motor vehicles you are taking, and actually vessels and aircraft is not covered here, only motor vehicles. So whatever motor vehicle you are taking it on rent, if it is used for the following purposes, in that case, whatever GST is paid on the rent amount, credit is available. Credit is available, guys. Okay, sir. Okay, let me continue. Then life insurance and health insurance. So if you are taken any of this as an inward supply on which GST is paid, credit is blocked. However, they have given in the proviso, provided that whenever any paragraph starts with provided, it means it is a proviso, guys. Okay. Provided that the input tax credit shall be available where an inward supply of such goods or services or both is used for making an outward taxable supply of same category of goods or services or both. Means if the following is taken as inward supply to provide same category of outward supply, in that case, can we claim the credit on inward supply? Yes, guys. For example, assume I am purchasing food and beverages, not to consume, but to sell it to my customers in my canteen or in my shop. In that case, as I am providing the same category of outward supply, on the purchase of food and beverages, whatever GST I have paid, can I claim the credit? Yes, guys, I can claim it. And it is same for all the items covered here. Okay. Next, second and third. Membership of a club, health and fitness center, and the last one, travel benefit. And membership, assume it is taken for employees or for anyone, even though it is for business or profession purpose, on the membership whatever GST is paid, no credit for it. Okay, sir. Next, if whether it is for a club, health or even fitness centers like gym. Okay. Next, third, travel benefits extended to an employee on a vacation, such as leave or home travel concession. For this, actually, exemption is given for an employee under Section 10(5) of Income Tax Act for travel to any place within India. Got it? Yes. Okay. Now, sir, assume employer is providing this to employees on which the employer has paid GST. Can he claim a credit of it? No. But there is a provision here. What is it? Input tax credit shall be available where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. Means for all these 3 points, guys. 1, 2, 3, whatever is covered under 17(5) clause B. Okay. If it is an obligation for employer to provide any of this to employees as per any law, then whatever GST is paid by the employer on the inward supply of this, credit is available. Credit is available. For example, assume as per labor law, it is mandatory for an employer to provide lunch to an employee. So employer has purchased the food in order to give it to the employees. On purchase of food, whatever GST is paid, can he claim a credit? Yes. Same way. Assume it is mandatory for employer to take health insurance policy in the name of employees. And on that, if GST is paid, can they claim credit? Yes, as it is obligatory for an employer to provide to the employees, guys. Is that clear? Yes. So I just gave two examples. Let it be any of this. Okay. If it is an obligation for an employer to provide, then credit is available. Out. Then coming to clause C, which talks about works contract services. Contract C. Yes. Works contract services, which is capital expenditure in nature, when supplied for construction of an immobile property, credit is not available, guys. Works contract services, which is nothing but construction services, which is treated as capital expenditure, credit is blocked. Sir, what if it is treated as revenue expenditure? What if it is debited to P&L account? Credit is available. So normally works contract services, which is used for construction of immobile property, we treat it as capital expenditure. Sir, what if it is for any repair work and all, which I have treated as revenue expenditure? Credit is available, guys. Credit is available. Okay, sir. Next, even if it is used for the following purpose, credit is available. What is it? Other than plant and machinery. So if work contract services is taken for the construction of plant and machinery, credit is available. Okay. Next, except where it is input services for further supply of works contract service. For example, assume I am a construction company. I have given my work or I have outsourced my work to a subcontractor. So he is providing works contract services to me, which in turn I will provide it to my clients or customers. So whatever the subcontractor is providing to me on which I paid GST, can I claim the credit? Yes. Now I am providing works contract services to my customers or clients. Assume on that also I am charging GST. Can my clients or customer claim the credit? No, they cannot claim credit. So if I have taken works contract services for myself, no credit. If it is for the further supply of same nature, I can claim credit. I can claim credit, guys. Okay. Then clause D. Goods or services or both, which is capital expenditure in nature, which is received by a taxable person for construction of an immobile property other than plant and machinery. So for plant and machinery, credit is available. Okay, sir. On his own account, including when such goods or services or both are used in the construction or furtherance of business. Okay. Assume, guys, I have purchased various goods which is used in the construction or services like architect or interior decoration or anything. I have taken in order to construct my office building or factory building. So for whatever GST I have paid on the purchase of goods or services, credit is blocked. If it is even for my own account, even though the building is used for my business, credit is blocked. But what if I purchase goods or services to construct a building to my clients or customers? Can I claim the credit for whatever GST I have paid on the purchase of goods or services? Yes, credit is available. In such case, if it is for someone else, credit is available. If it is for me or myself, credit is not available. So if a construction company is purchasing goods or services which will be used in the construction of a building for a customer or client, for a construction company, credit is available, guys. Credit is available. Okay. And sir, what if in this case it is treated as revenue expenditure? Credit is available. So please be careful. Only if it is treated as capital expenditure in both these cases, credit is blocked. Okay. Here it is construction services and here it is goods or other services which is used in the construction of an immobile property. And other services here means might be architect or interior decoration or any other services. Okay, sir. Fine. So I will just show you some examples for this. So for clause B also I have given few examples. This is for clause B, guys. Just have a look into it. Pause the video and go through. Just read all the examples. You will get more clarity. Okay. Hope you're done. And this is for clause C. Works contract services. Then this is for clause D. Goods or services used in the construction of immobile property. Okay. So even the explanation will tell only to the extent it is capitalized, the credit is blocked. Means if the expenditure is treated as revenue, which is debited to P&L account, is credit available? Yes, guys, credit is available. Okay. Chalo, we'll move forward. Clause E. Goods or services or both on which tax has been paid under section 10, that is composition scheme. Guys, we have learned this in section 10 itself. The composition supplier cannot claim credit on his inward supply and he cannot also pass on the credit to his recipients. So again, it is repeated here in clause E of section 17 subsection 5. Next, 17(5)(f). Goods or services or both received by a non-resident taxable person except on goods imported by him. Guys, this is a special person who is non-resident in India, is coming from outside the country or outside India to India for a temporary period to sell his goods in India. And he will take registration as per section 27 of CGST Act for a temporary period, that is maximum 90 days, which can be further extended for another maximum 90 days, 90 plus 90 maximum. Okay, sir. Okay. And what he can do is, as per GST law, he can import his goods from outside India, and on the import he will pay IGST. And whatever IGST has paid on importing his goods, when he further sell the goods in India, is liable to pay output tax? Yes. So against that output tax, he can claim the credit of IGST on the import of goods made by him. Sir, what if he purchase any goods in India or if he avail any services in India on which GST is paid? Credit is not available. Credit is not available. So indirectly they are telling import your goods into India, sell them here, claim the credit and go back. In this process or during this period, if we purchase any inward supply in India on which GST is paid, no credit on it. No credit on it, guys. Okay. Next, FA. So this is connected to income tax also. Goods or services are both received by a taxable person which are used or intended to be used for an activities relating to an obligation under corporate social responsibility as per section 135 of Companies Act 2013. So before I explain this, let me recall your knowledge with respect to income tax. As per explanation to section 37, which is a general deductions under the PGPP head, they have clearly told if a company is incurring any expenditure towards CSR activities, they cannot claim it as deduction as it is not for business purpose. So no deduction is available for an expenditure incurred for CSR purpose. Yes, sir. This is as per explanation to section 37 under PGPP head. Okay. Same way here they're telling if any goods or services is purchased by a company in order to use it for their CSR activities, on the purchase whatever GST is paid, no credit is available. No credit is available. For example, assume a company has purchased a laptop on which they have paid GST. Now this laptop is used by the company as their CSR activities, means they are distributing it freely for assume government school students or for economically weaker section students as a part of their CSR activity. So on the purchase of laptop, whatever GST they have paid, can they claim the credit? No, they cannot. So purchase of laptop also they cannot claim it as an expenditure. They cannot even claim depreciation on it as per Income Tax Act. Okay. Sir, on purchase of laptop we pay GST. No, can we claim a credit of it? No, as it is not considered to be used for business purpose. No credit, guys. Yeah, yes. See how they are doing. They are making companies to mandatorily contribute towards the society for which they are not giving any benefit to the companies. Okay. Then coming to G, goods or services are both used for personal consumption. This is also kind of repetition. Already they told only if it is used for business purpose, credit is available. So it is understood that if it is for personal purpose, no credit. Yes. Next, H. If goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. Okay. As there is no output tax, you cannot claim credit of input tax, guys. Okay. But however, where the activity of distribution of gifts or free samples falls within the scope of supply, as per Schedule 1, the supplier would be eligible to avail ITC. Very important, guys. So please pay attention here. Very important. Now assume I have purchased a goods on which I have paid GST. I have claimed the credit. And after claiming the credit, the goods is lost or it is disposed of free of cost. Is it a supply? Yes, it is a supply as per para 1 of schedule 1, guys. Even without consideration, it is treated as supply. Why so? Because when I purchased, I already claimed credit. So in that case, on my outward supply, even without consideration, should I pay GST? Yes. Okay. Next, assume I have purchased the goods on which I have paid GST. Before I claim credit, I have lost it, or I gave it as a free sample, or I disposed it free of cost. In that case, have I still claimed the credit? No, I was about to claim credit. Before that, I have lost the goods or I have given it as free samples. In that case, can I go ahead and claim credit? No, I cannot. As my outward supply is not taxable or output tax is zero, there is no credit, guys. Got it? So, when goods are purchased, check whether credit is already claimed or not. If credit is already claimed, then this becomes a supply as per Schedule 1, Para 1. Para 1 of Schedule 1, read with section 7(1)(c). So it is an outward supply, pay output tax. Okay. No, sir, before claiming credit, we already lost the goods or we are giving it as a free samples. Then don't claim credit. And in that case, will it be a supply as per Schedule 1? No, no. As you have not yet claimed the credit and your credit is blocked, it will not be a supply as per Para 1 of Schedule 1, guys. Is that clear? Yes. So in simple, whenever there is any of such events, check whether credit is already claimed or not. Accordingly, decide whether credit is available If credit is not yet claimed, credit is not available. If credit is already claimed, then it will be a supply as per para 1 of schedule 1. Got it? Yes. How beautifully connected you see. Then one more clarification I would tell. Guys, on my outward supply, if I am giving any discount, like buy one, get one, or buy more, save more, like that. Sir, on my inward supply, can I claim full ITC or should it be reduced as per the discount on my outward supply? No, no, no. No need to reduce any credit. You can claim full credit. So if on outward supply, if supplier is giving any discount on whatever type of discount, will it affect my ITC? No, I can claim full ITC. Got it? Yes, it is just a strategy played by the suppliers offering the discounts and all. Okay. Next, any tax paid in accordance with the provisions of section 74 up to the financial year 23-24. Okay, so section 74 is a recovery section. If any amount is paid as per section 74 up to the financial year 23-24, credit is not available. Sir, what if it is paid after 23-24? Credit is available. And what is section 74? It is a recovery section, not a part of your intermediate syllabus, so you need not worry. Got it? Yes, sir. Okay. And one more thing, sir, with respect to the motor vehicles, credit is blocked. But by the distributor or the manufacturer, what if any vehicle is used as a demo vehicle, sir, which is used by the potential buyers to see the features of the car and all, or to experience it? Guys, it is considered to be for further supply of such motor vehicle. May not be same motor vehicles, but other motor vehicles. So demo vehicles will help the manufacturer or the distributor to sell other motor vehicles. So on demo vehicles, is credit available? Yes. There is a clarification telling on demo vehicles, whatever GST is paid, credit is available. Credit is available, guys. Okay, sir. Fine. We'll move forward. So section 17 is completely done. Now we will move towards section 18, guys, which talks about the credit in special cases. Credit in special cases. So what is it? 18 subsection 1, there are 4 cases here. Person who has applied for registration within 30 days from the date on which he became liable. So this provision is given in section 25. Whenever a person is liable, he need to apply for registration within 30 days. Okay. Goods entitled as on. He can claim the ITC on the inputs held in the form of raw material, WIP and finished goods as on the date immediately preceding the date from which he became liable to pay GST. Okay, or tax. Okay, but ITC has to be claimed within 1 year from the date of issue of invoice by the supplier. And this provision is given in 18 subsection 2. Okay, sir. Fine. This is when I am liable and I applied for registration within 30 days. Sir, what if I am taking voluntary registration? Even in that case, he can claim ITC on the inputs held in the form of raw material, WIP and finished goods as on the date immediately preceding the date of grant of registration. Okay, I will try to explain this with an example. Please pay attention. Just a minute. Yeah, pay attention, pay attention. Okay. After I explain, if you guys still feel that, sir, I want to just go through it once, you can pause and go through. Okay. Assume I was liable for registration on 1st January 26. I was covered in section 22 or 24. So I was supposed to get registered. And as per section 25, I should apply for registration in GST REG01 within 30 days. Okay. Assume I have applied for registration in GST REG01 on 15th January, which is within 30 days. Okay. And registration is granted for me in REG06. REG06 is a registration certificate. Okay. Yes. On 20th January. Okay. I am called as registered person from what date? From the date I was liable. As per rule 10, if I have applied for registration within 30 days from the date I was liable, rule 10 is telling the effective date of registration is the date on which I was liable. And section 18 subsection 1 clause A is telling whatever stock of raw material WIP, that is work in progress and finished goods, I had on 31st December, that is preceding day. From 1st January, I am called as registered person. Correct? Yes. So on 31st December, whatever stock of raw material, WIP and finished goods I have, ITC is available on it. ITC is available on it. Sir, what about capital goods? On capital goods, credit is not available. So listen guys. See, I am called as registered person only from 1st January. Anything I purchase on or after 1st January, I can claim the credit, because on my outward supply, I am liable to pay GST. On my inward supply, I can claim credit. Okay. But anything which I was purchased before 1st January, I am not supposed to claim credit because I am not registered, hence my output tax is 0. Okay. But anything which I have purchased before 1st January, but if I am having it as my stock on 31st December 2025, that is the immediately preceding day, even though I have purchased it when I was unregistered, when will I use it, guys? On or after 1st January? Yes, because the closing stock on 31st December will become a opening stock on 1st January. So this stock, I will be using it on or after 1st January when I am a registered person. And anything I supply on or after 1st January, I am liable to pay output tax. So in that case, as a special case, they are giving credit for the stock of raw material, WAP and finished goods, whatever I am having on 31st December, even though I have purchased it when I was unregistered. Is that clear? Yes. Okay. Next. So you might actually get a doubt, sir, what if registration is not applied within 30 days? Still registration is granted. Registration will be granted. Assume I was liable on 1st January to apply for registration, but I applied on 14th February. It is a special date for me. So I wanted to apply on 14th February only, which is after 30 days. So registration will be granted to me. Assume it is granted on 20th February. As per Rule 10, when a person has not applied for registration within 30 days, then the effective date of registration will be the date on which registration is granted to them. So anything purchased on or after this, credit is available. Sir, what about the stock? What about the stock? No. Section 18 doesn't cover this case, guys. Sorry. Section 18 doesn't cover this. So only if it is applied within 30 days, they are giving a benefit of claiming credit on the stock on the preceding day. Whereas if you don't apply within 30 days, you lose that benefit. So this case is not covered in section 18, but still I have explained you so that you will have a clarity. Got it? Yes. Next. Sir, I am not at all liable for registration, but still I applied voluntarily and I took registration, sir. So I applied for registration on 15th June and registration is granted on 18th June 2025. So I am called as a registered person from what date, sir? From 18th June, guys. From 18th June. So on or after 18th June, if I make any inward supply, I can claim the credit. On my outward supply, I am liable to pay output tax. But as per section 18 subsection 1, they are also telling on the preceding day, that is on 17th June, whatever stock of raw material, WAP and finished goods I have, I am eligible to claim a credit of it. I am eligible to claim a credit of it. But for capital goods, no credit. So in both these cases, for capital goods, they are not giving the credit, guys. So please be careful. Got it? Yes. So we discussed both of this. When a person was unregistered, now is getting registered under GST. We give benefit, but not full benefit. Only for capital goods, we are not giving. Whereas for raw material, WAP and finished goods, yes, we are giving. Okay, sir. Next. Registered person who switches from composition scheme to regular scheme. That is, he is moving from 10 to 9. Okay. Or else, a registered person whose exempt supply become now taxable. His outward supply was exempt previously, but now the exemption has been withdrawn. Now it is taxable. In that case, he can claim the ITC on the inputs held in the form of raw material, WIP, finished goods, as well as capital goods addition here, as on the day immediately preceding the date from which he becomes liable to pay tax under regular scheme, that is section 9. That is in this case. Whereas in this case, the date from which the exempt supply becomes taxable, no, preceding day, whatever stock of raw material, WAP, finished goods, as well as capital goods he has, on that he can claim credit. But even in this case, he has to claim the credit within 1 year from the date of invoice, guys. Okay, and there is one more 5% point with respect to capital goods. I will explain it. Okay. So let me explain with an example. 18(1)(c). Assume a person was under section 10, now he is moving to section 9. Because on 15th February, he became ineligible for any reason. Maybe he started supplying outside the state, or his aggregate turnover crosses the threshold limit of 1.5 crore, or 75 lakh, or 50 lakhs. Okay, because there are two composition schemes, you should know what is the limit applicable. Okay. So assume on 15th February, he became ineligible. Immediately, I have to switch to section 9. And when he is under section 10, on his outward supply, he will pay tax under a composition rate. Whereas on inward supply, no credit, guys. No credit. But as soon as he switches to section 9, on his outward supply, he has to pay tax at normal rate, and on inward supply, can he claim credit? Yes, he can claim the credit. But now, when he's moving from section 10 to 9, whatever stock he is having on the preceding day, that is on the 14th February 2026, stock of what? Raw material, WAP, finished goods, as well as capital goods, credit is available. Why, sir? Because when he will use this stock as whatever is the closing stock on 14th February is the opening stock on 15th February. When is he going to use it? On or after 15th February? When he is under section 9? On outward supply is supposed to pay tax at normal rate? Yes. So can he claim a credit of it? Yes. So this is a special case covered under section 18(1)(c), guys. So if you remember, I had already explained when I was covering section 10, I had already explained this. There I had mentioned this point that I would be covering it in the input tax credit chapter. That is what we are doing it as per section 18. And the details of all this stock has to be given in ITC 01 within 30 days, guys. Within 30 days from year. Okay, not only in this case, in all the cases, whatever is covered here, no, all the 4 cases. Okay, so they are giving the credit on the stock of either raw material, WAP, or finished goods, whereas here, even on capital goods. So the details of all this inventory has to be given within 30 days in ITC 01. ITC stands for input tax credit. Got it? Yes, so for all the 4 cases. Okay, sure. Okay, so this I already covered in the composition scheme topic, guys. I will move forward. Now, previously my outward supply was exempt. Okay, when my outward supply is exempt, I cannot claim credit on my inward supply. Credit is blocked. Correct, sir. But on 1st October, assume the exemption is withdrawn. Means from 1st October, my outward supply becomes taxable. So when my outward supply is taxable, can I claim credit on my inward supply? Yes. So anything which I purchase on or after 1st October, I can claim the credit because my outward supply is taxable. But as per section 18(1)(d), what is special is whatever stock I am having on 30th September 2025, that is the preceding day, stock of what? Raw material, WIP, finished goods, as well as capital goods. They are giving me the credit of it. They are giving me the credit, guys. Got it? Yes. So as per section 18(1)(c) as well as 18(1)(d), they are giving credit even on capital goods. Got it? Yes. But there is one point. What is it? We need to reduce 5% for each quarter or part of the quarter for the period which is used before this. For example, assume I have purchased a capital goods when my outward supply was exempt. I have paid a GST of 10,000 and I have already used it for 2 quarters before 1st October. So can I claim full 10,000 credit now? No. So from 10,000, I already used for 2 quarters before 1st October. No, for each quarter, I need to reduce 5%, which is totally 10%. So 10% of 10,000 comes to 1,000. So what is the remaining credit I can claim on capital goods? 9,000, guys. 9,000. Is that clear? And the provisions with respect to capital goods is same even for section 18(1)(c). When you are moving from composition scheme to normal scheme. For each quarter you have used the capital goods before this, you need to reduce the credit by 5% for each quarter or part of the quarter. And while calculating the quarter, even if it is 1 day in a quarter, you have to take full quarter and it is standard quarters. Standard quarters means, for example, assume you have purchased an asset on 1st June and your exemption is withdrawn on 1st August. So how many quarters you have to consider? 2 quarters. April, May, June, July, August, September. Even a part of the quarter, you have to consider full quarters. And while counting the quarters, it is standard quarters, guys, like April, May, June, July, August, September, October, November, December, January, February, March. Got it? Yes, sir. Fine. So 18 subsection 1 covers totally 4 special cases. We have covered all of this and I have given the point with respect to capital goods here. Let me just read it. ITC on capital goods will be reduced by 5% per quarter of the year or part thereof of usage from the date of the invoice. And please be careful, capital goods is covered only in the last 2 cases because here a person was already registered, but now he was registered under 10, now he is going to 9. And sir, if I have to pay tax under section 10, should I get registered? Yes, registration is mandatory. Okay, so I am moving from 10 to 9. Whereas I am a registered person, but my outward supply was exempt. Now it is becoming taxable. In that case, they are giving credit even on capital goods. Whereas here, I was not registered, but now I am getting registered for the first time under GST. They're giving you a benefit, but not fully. On capital goods, it is not given here. Got it? Yes. So if you want, you can just write CG and scratch it, which means no credit for capital goods. Okay. Subsection 2, we already seen. Guys, whenever we are claiming the credit for any raw material, WIP or finished goods or even capital goods, it should be purchased within 1 year. Sir, what if it is older than 1 year? Assume it was purchased 1.5 years back, 2 years back, no credit for it. It should have been purchased recently. That is within 1 year. Within 1 year from what time, guys? Whatever time I have given here, no? Within 1 year from here. Okay? Yes, within 1 year from here. In all these cases. Got it? Yes. Okay. So subsection 2 is here that itself, which I already mentioned in the table. Subsection 3. In case of transfer of a business on account of sale, merger, demerger, amalgamation, lease, transferor, the transferor shall be allowed to transfer the ITC, that is unutilized ITC, which remains unutilized in his electronic credit ledger to the transfer. Guys, assume I am selling my business to you as a going concern. Now all the assets and liabilities of my business will belongs to you. From tomorrow, you are the one who is carrying on the show. Yes. So now whatever credit is lying in my electronic credit ledger, which I have not utilized, can I transfer it to you? Yes. I will transfer it from my electronic credit ledger to your electronic credit ledger. And you are supposed to take separate registration. As I have sold my business, I will cancel my registration. You will obtain a separate registration. I cannot give my registration to you because my registration would be under my PAN. So I will cancel my registration. You have to obtain a separate registration, and whatever credit is lying in my credit ledger which is not yet utilized, I can pass it on to you. Yes, I will just explain it. Just a minute. Okay. So this is as per section 18 subsection 3. You can see. Assume eBay has been acquired by Google and they have named a new entity as Google. Name of new entity. Okay. Oh. And eBay had unutilized balance of input tax credit in their credit ledger, which is 2 lakh. So now what they can do is they will form GST ITC 02 for the transfer of unutilized ITC and furnish a certificate certifying the transfer of business. So in that case, the new entity has to accept the details of input and get the credited of ITC in their electronic credit ledger. That is the new entities. And they have to record input and capital goods in their books of accounts, guys. Got it? Yes. Then 18 subsection 4 is, guys, whatever we learned here, no, that reverse case is covered in subsection 4. Here a person moved from 10 to 9, or his outward supply which was exempt became now taxable. Yes. But here reverse case is covered. Sir, I was under section 9. Now I want to move to 10. Or my outward supply was taxable. Now it is becoming exempt by way of new notification. In that case, what, sir? I will just explain the provision first with an example. Then we will go and read it. Assume, guys, I was under section 9 and on my outward supply, I was paying tax at normal rate, and on my inward supply, credit was available. Credit is available. But I felt, oh, yo, too much rate, high rate. Every month I need to pay tax. Let me move to section 10. Whenever a person wants to move from section 9 to 10, he has to move it from the beginning of the financial year, not in between the year. From 9 to 10, it is always from the beginning of the financial year. Okay, sir. And once he go to section 10, on his outward supply, he has to pay tax at composition rate. And on inward supply, he cannot claim credit tax. He cannot claim credit. Correct? No. Hello. Correct, right? Yes. Respond. Yes. Okay, sir. Now what they are telling is, on 31st March, that is the preceding day, whatever stock of raw material, WAP, finished goods and capital goods is there, on that, if when it was purchased, guys, when he was under section 9, so he was eligible to claim credit. Yes. But when he will be using this stock, on or after 1st April, when he is under section 10, when credit is not available? Yes. So they are asking you to reverse it. If you have already claimed credit, please reverse it. Means you have to pay it. No interest. You need to just pay the ITC, whatever you already claimed. No, sir, ITC was lying in my electronic credit ledger. I was planning to claim credit. Forget that. You cannot claim credit. Forget it. Is that clear? Yes, sir. So same way, when they are giving you the benefit, when you are moving from 10 to 9, when they are giving benefit as per section 18.1, right? Yes. Same way, if you are moving from 9 to 10, they're taking back from you. They're taking back from you. Yes, sir. Same scenario is also covered. One more case under 18.4 only. One more case. Assume my outward supply was taxable. So I was supposed to pay output tax. So on my inward supply, can I claim credit? Yes, I can claim credit. No problem. Okay. Now, on 1st July, assume the government released a new notification telling whatever I am supplying is exempt. Oh, great. God help me or government help me. So on or after 1st July 2025, my outward supply is exempt. In that case, on my inward supply, I cannot claim credit. Right? No? Yes. So anything which I purchase on or after 1st July, I cannot claim credit. But anything I have purchased before 1st July, can I claim credit? Yes, I was eligible to claim credit. But if I am having any stock on the preceding day, that is on 30th June, stock of raw material, WIP, finished goods and capital goods, I would have purchased it when my outward supply is taxable. But when will I use it, guys? On or after 1st July? That is when my outward supply is exempt. They're telling on this, if credit is already claimed, I should reverse it. No, sir, I have not yet claimed the credit. I was about to claim, but before that, my outward supply became exempt. In that case, you forget the credit. That's all. You cannot claim it. You cannot carry forward it. Got it? Yes, guys. Because the simple reason is, even though this stock is purchased on or before, sorry, before 1st July, you will be using it on or after 1st July. So credit on this is not available, guys, because the closing stock on 30th June will be an opening stock on 1st July. Is that clear? Yes. So even on capital goods in both the cases, credit has to be reversed if you already claimed. But should I reverse full credit? No. They told for 18 subsection 4, consider the total useful life of a capital goods is 5 years, which is equal to 60 months. And check how much you already used. That much you need not reverse. Only for the remaining life you need to reverse. For example, assume I have purchased a capital goods on which I have paid GST 1 lakh rupees. When did I purchase it? When my outward supply was taxable. And before 1st July, assume I already used it for 20 months. Okay. So how much credit? Assume I have already claimed full 1 lakh credit. I have already claimed full 1 lakh credit. And before 1st July, I have used it for how many months? 20 months. Even part of the month, you need to round it off. For example, assume it is 19 months, 20 days. Round it off to 20 months. Sir, 19 months, 1 day. Round it off to 20 months. Oh. So what is the remaining useful life? 40 months. Only to this extent, credit has to be reversed. So what is the total credit already claimed? 1 lakh. Divided by total useful life, which is 60 months, equal to 5 years, into 40 months. So whatever amount we get here, that much has to be reversed, guys. That much has to be reversed. That means for the remaining 20 months, credit is available. Huh? Yes, you already claimed it. Is that clear? I repeat the example. I had purchased a capital goods before 1st July, and on that I have paid a GST of 1 lakh. And before 1st July, I have already used it for 20 months and I have already claimed full 1 lakh credit. Okay. What is the total useful life of the capital goods as per section 18 subsection 4 read with rules is 60 months. So what is the remaining useful life? 60 months minus 20 months. What is the remaining useful life? 40 months, which falls on this side. So for 40 months, we need to reverse the credit. So simple, total credit claimed divided by 60 months into 40 months. You need to reverse it. Got it? Sir, what if capital goods is already used for more than 60 months? Assume 65 months it is already used before this. Then nothing to be reversed, guys. See, in reality, some capital goods might be used for more than 60 months. But for section 18 subsection 4, we need to consider the maximum useful life as 60 months. For example, assume a capital goods was purchased and used already for 65 months here and remaining 15 months it will be used here. Should we reverse anything? No, guys. No need to reverse anything. Clear? So if the asset is used for more than 60 months before this, no need to reverse anything. And same to same provision for capital goods is applicable even in this case. Even in this case. Got it? Yes, sir. Okay. So that is what is covered in section 18 subsection 4. Let me quickly read it. Where any registered person who has availed of input tax credit opts to pay tax under section 10. That is, you are under section 9. You already claimed credit. Now you are moving to section 10. Or where the goods or services are both supplied by him become wholly exempt. New exemption has been introduced by way of notification. Okay. He shall pay an amount by way of debit in the electronic credit ledger or electronic cash ledger equivalent to credit of input tax in respect of inputs held in the stock and on capital goods on the day immediately preceding the date of exercising of such option or the date of such exemption, guys. Okay, whatever credit you already claimed, you need to reverse it on the stock. Okay. With respect to capital goods, for capital goods held in the stock, the input tax credit involved in remaining useful life in months shall be computed on pro rata basis, taking the total useful life as what? 5 years, which is equivalent to 60 months. So how much credit I need to reverse means simple. Total ITC already availed on capital goods into the remaining useful life, which will fall on or after that date, divided by 60 months. Remaining useful life is nothing but, guys, take 60 minus what is already used before this. Assume already used is 35 months. So you need to take 60 minus 35. The remaining will come here. For this much months, we need to reverse the credit. Clear? Which is 25 months. Okay, sir. Next, provided that after the payment of such amount, the balance of input tax credit, if any, lying in electronic credit ledger shall lapse. Means if you are still having any credit which you are supposed to claim, forget that credit. You cannot claim it now. Got it? Yes. Then coming to subsection 6, guys. Subsection 5, you need not worry, it is not a part. Subsection 6. In case of supply of capital goods or plant and machinery on which input tax credit has already been claimed, then the registered person shall pay an amount which is equal to ITC taken reduced at 5% or for every quarter or part thereof, or the tax on the transaction value determined under section 15, which is nothing but the GST on the sale value, whichever is higher. Whichever is higher, guys. And as I already told you, see, before subsection 6, subsection 5 will come. There is no content in that. They are just told as may be provided in the prescribed manner. With respect to the 60 months and all, actually it is given in the rules, guys. Even here, this 5% and all is there. No? That are the content which is actually given in the rules. Anyway, I already given you, so you can learn like however I have explained. Okay, sure. So, if there is any capital goods or plant and machinery which is purchased, and when it is purchased, whatever GST we have paid, we already claimed the credit. Okay. So take that credit what is claimed, and for each quarter or part of the quarter reduce 5% from the date of purchase till the date of sale. For each quarter or part of the quarter reduce 5%. Keep that amount. Then calculate GST on the actual sale value. Whichever is higher has to be paid, guys. Whichever is higher has to be paid. Okay. I will just try to explain this with an illustration. Just a minute. Yeah. So this illustration I have given in my provision book. Yeah, just observe. X Limited purchased a machine for 1 lakh and brought it on 1st August 2025 purchase date or invoice date and paid 12% IGST on it, 12,000. He availed input tax credit and used the capital goods in his business. On 5th November 2025, he resold it as a second-hand machine for 65,000 transaction value. Find out the amount of tax payable or ITC reversible in the above case. So we need to, how many quarters it is used before sale, guys. So in between this, how many quarters are there? 2 quarters. Even part of the quarter you have to take fully. Oh. So what is the credit already claimed? 1 lakh into 12%, which comes to 12,000. Then for that, for each quarter which is used, we need to reduce 5%. So how many quarters it is used? I have given you. It is used before sale for 2 quarters. Okay. So for each quarter you reduce 5%. So totally 10%. So 10% of 12,000 comes to 1,200. Reduce it. You will get 10,800. Keep it aside. Let me denote it by A. Then take transaction value. Calculate GST on it 12%, which is 7,800. Denote it by B. Compare both of this. Whichever is higher has to be paid as. That is 10,800 has to be paid. Is that clear? Yes. Because some people, after claiming the credit, they may sell the asset for a very lesser value. So in that case, government is not ready to forego. Is not ready to forego the revenue. So they will check what is the ITC claimed. For each quarter or part of the quarter, it is used before the sale, reduce 5%. Then compare that with tax on the transaction value. Whichever is higher has to be paid. But this point is not applicable in the following cases. When is it? Provided that where refractory bricks, molds and dies, jigs and fixtures are supplied as a scrap, the taxable person may pay tax on the transaction value of such goods determined under section 15. So for the following items, which are normally used to give shape for the products, guys. So whenever a same product is produced in large quantity like 1000, 1 lakh, 2 lakh and all, so there will be few equipments or instruments which is used to give shape for each and every product produced. So that are called as refractory bricks, molds, dies, jigs, fixtures and all. Okay. So after using this in the manufacturing process and if it is sold, then on sale value, whatever is the GST, just pay that. No need to compare this ITC and all. This point will not come for whatever I have highlighted here, guys. Is that clear? Yes, sir. Yes, till now we have understood when credit is available or when credit is not available as per section 16, 17 or 18. And 18 talks about only some special cases, guys. So please be careful with it. Whereas all the normal cases are covered in section 16 and 17. Yes. Sir, I am eligible to claim credit. So credit is lying in my electronic credit ledger. Tell me how to utilize it. No, sir. We are learning it, guys. So if a person is eligible to claim credit, how can he utilize it? So whatever credit is lying in electronic credit ledger, it can be used to pay only the output tax of a person. So output tax means whatever I am supposed to pay on my outward supply. Sir, on my inward supply, if RCM is applicable, I am supposed to pay as a recipient tax under reverse charge mechanism. So to pay that, can I use my electronic credit ledger balance? No, guys. Because if I am supposed to pay tax on my inward supply under RCM, it is an input tax. So once I pay it, I can claim that as a credit. But to pay that, can I use my electronic credit ledger balance? No. Even to pay interest, late fee or penalty under GST, you cannot use your electronic credit ledger balance. So the balance in electronic credit ledger with respect to your input tax can be used only to pay output tax. And whatever provisions we are learning now is as per section 49 read with rules, guys. And it is a part of payment chapter, but I am covering it here itself so that everything with respect to input tax credit we will finish in this chapter itself. Okay, sir. Fine. So pay attention. This is very important. You will get a questions, guys. You can get an exclusive question only on ITC, or else they will ask you to calculate GST liability, or how much amount of GST has to be paid through electronic cash ledger, or what is the minimum amount of GST to be paid, that is through cash ledger, where even the utilization of credit will be a part of it. Will be a part of it, guys. Okay. So let us learn. So assume a person has a IGST credit. First, you should always use IGST credit before using CGST and SGST credit, guys. And you should know one thing. Whenever you are taking a registration under GST, it is state-wise and PAN-based. For each and every state, you have to take a separate registration. And payment of tax as well as return filing is registration-wise. For each and every registration, return has to be filed separately and tax has to be paid separately, guys. So whatever we are discussing this has to be done for each and every registration separately, yeah? Yes. So for a particular registration, a registered person will either have SGST or UTGST, guys, not both. Either of that. Okay? Yes. Fine. So let us begin with. Assume a person has a IGST credit. First, he has to use that against IGST liability. If still the credit is remaining or pending, he can use it against CGST liability or SGST liability in any order, in any proportion. This is at the option of registered person and it should be used in the most beneficial way. Very important in the questions, guys, in calculations, because it is left for us. I can adjust the remaining IGST credit fully against CGST or fully against SGST or partly against CGST and partly against SGST, however I want. And we should plan it in such a way that after utilizing the credit, whatever amount we pay through electronic cash ledger should be as low as possible or as minimum as possible, guys. Got it? Yes. And I will be uploading a separate video on the questions discussion on GST liability calculations or payment of GST. So once you cover the entire syllabus, please have a look into that also, because that covers the majority of the portions of GST, guys, including time of supply, value of supply, place of supply, exemptions, as well as the utilization of input tax credit. Okay, fine. So first, I repeat, IGST credit has to be used against IGST liability if still anything is pending against CGST or SGST liability in any order, in any proportion. And only once IGST credit is fully utilized, that is, it has come to zero, we can go ahead and use CGST and SGST credit. Okay, sir. So assume your IGST credit is 0 now, or you don't have any IGST credit. In that case, CGST credit will be used first against CGST liability. If you still have a credit of CGST, you can use it against IGST liability. Sir, what if my IGST liability is 0? Then if you cannot utilize the credit, you can carry forward it to the next month. In any case, if you cannot utilize the credit in the current period, you can carry forward it to the next tax period. Oh, next. So CGST credit, can I use it against SGST? No, you cannot. Next, SGST credit will be first used against SGST liability. If still any SGST credit is remaining, you can use it against IGST liability, guys. IGST liability. And everything I have given here, guys. Clear? Assume a person doesn't have any IGST credit, then no need of these steps. Straight away, can I go ahead and use CGST? Yes. Or else, sir, whatever my output tax is there, no, everything I adjusted from my IGST credit only. Then there is no need to use CGST and SGST credit. In that case, if you already utilized full IGST credit against output tax, and now the output tax has already come to 0, which you have to pay through cash ledger, then there is no need to use CGST and SGST credit. In that case, you will carry forward it to the next tax period, guys. Got it? So, fine. So, this is the procedure or sequence which you need to follow to utilize the credit. Got it, sir. So, in simple, CGST credit cannot be adjusted against SGST liability. Same way, SGST credit cannot be utilized against CGST liability. And if it is a registration taken under UTGST Act, in place of SGST, UTGST would be there. That's all. Adjustment pattern or sequence would be same, but instead of SGST, it would be UTGST, guys. Got it? Yes. Then we have few rules to cover. We will just see that. This table, whatever I have given you, if you want, you can just pause and go through it once. Very important, guys, for utilization of credit, because normally students might go wrong here, especially in this step. Please be careful. So first utilize IGST credit fully, first against IGST liability, then if still use remaining against CGST or SGST in any order, in any proportion, guys. Only then you can go and touch CGST and SGST credit. Fine. Rule 86A. In case the commissioner or an officer authorized by him in this behalf, not below the rank of an assistant commissioner, has reasons to believe that ITC available in the electronic credit ledger has been fraudulently availed, or the person is ineligible for it, but still he has availed it. Maybe because of the bogus purchases or the fake bills or fake invoices. He may, after recording the reasons in writing, prohibit the use of ITC. Even though it is appearing in my credit ledger, I have fraudulently availed it. In that case, the commissioner or an officer authorized by him can prohibit me from using the ITC for discharge of any liability under section 49, that is output tax, or for claim of any refund of unutilized amount, guys. Okay, sir. Then coming to rule 86B, important. Guys, if the question doesn't specify anything about the rule 86B and all, then you will always adjust the credit in this order. Whatever credit is there, you utilize fully. But when rule 86B is applicable, we cannot utilize the credit fully. Maximum credit which a registered person can use is 99% of his output tax. 99% of his output tax. Okay, what is it telling? It is not applicable for everyone. It is only applicable for a big supplier. Okay. Rule 86B of CGST rules restricts the amount available in electronic credit ledger, which a registered person can use to discharge his output tax liability to 99% of such liability in cases where the value of taxable supply other than exempt supply and zero rated supply in a month exceeds 50 lakh. This rule overrides all other rules, guys. Okay. Now, if a taxable supply of a registered person in a month is more than 50 lakh, only then rule 86B is applicable. So just because in a month it is more than 50 lakh, is it applicable forever? No. For every month we need to check separately. So in a month, if a taxable outward supply is more than 50 lakh, then rule 86B is applicable. So what is rule 86B is telling? Guys, assume my output tax is 20 lakh, but I have a credit of 25 lakh. Can I use full credit? No. They're telling maximum credit I can use it 99% of 20 lakh. That means remaining 1% should I pay through cash ledger? Yes, minimum 1% I have to pay through cash ledger. Sir, what if my output tax is 20 lakh, but I have a credit of only 18 lakh? That means I am paying 2 lakh through cash ledger. Yes, I have to pay it. So when is this rule effective is or relevant is only when a person is having credit more than output tax. In that case, can you utilize the credit fully? No, they're telling you can maximum use 99% of your output tax as a credit. Remaining credit, if any, you will carry forward. Whereas 1% of the output tax has to be paid through cash ledger. And this 50 lakh includes only the taxable outward supply, which excludes exempt as well as zero rated supply. Actually speaking, zero rated supply is taxable supply. But on zero rated supply, just a minute. On zero rated supply, output tax would be zero. On inward supply, credit is available. And when credit is available, you are eligible to use it, but you cannot use it. Why? Because output tax is zero. So they will give you a refund of entire 2 lakh. That is unutilized ITC in case of zero rated supply can be claimed as refund, guys. Yes, sir. So even though zero rated supply is a taxable supply, from calculating that 50 lakh, they're excluding zero rated supply because anyway, even if you don't use the credit, we need to give a refund of it. So that is why they have excluded both exempt supply as well as zero rated supply while calculating this 50 lakhs. Is that clear? For example, assume my taxable outward supply is totally 80 lakh. In that zero rated supply is assumed, this is zero rated supply, is assumed 20 lakh and others is 60 lakh. So I need to take only this. So 60 lakh is more than 50 lakh. Is rule 86B applicable for me? Yes, applicable. That is only if your domestic supply, which is taxable, is more than 50 lakh in a month, not in a year, in a month. And just because it is applicable in 1 month, will it be applicable for all other months also? No, for each and every month, we need to check it separately, guys. Got it? Yes. But the rule 86B is not applicable in the following cases. Even though the monthly taxable supply is more than 50 lakh, still in the following cases, rule 86B is not applicable. When is it, sir? This restriction shall not apply in the following cases where the said person or proprietor, said person means the registered person, or the proprietor, karta, managing director, or any of its two partners or old-time directors, members of managing committee of association or board of trustee, means whoever is the face of that entity, as the case may be, have paid more than 1 lakh as income tax, not GST, income tax in each of the last 2 financial years. Okay, so we are in the current year. We need to check what is the income tax paid by such person or whoever is the face of that entity. What is the income tax paid in last 2 years? And in each of the last 2 years, they have paid more than 1 lakh income tax. In each of the year. It is not both the years put together. In each year, they should have paid more than 1 lakh, more than 1 lakh. In that case, in the current year, for the said person or the entity, whoever is the face of it, if they have paid more than 1 lakh income tax in the last 2 years, in the current year for the said person or the entity, rule 86B is not applicable. Rule 86B is not applicable, guys. Entity means assume a company. So who is the face of a company, guys? The old time directors, correct? Or assume the trust is the entity. So who is the face of it? Board of trustee. Or if it is a partnership firm, who is the face of it? Two partners. Clear? So they are covering the said person, that is whoever is the registered person under GST, or whoever is the face of it. In case of HUF, we can call it as Karta, who is the face of it. Okay, yes. Okay, this is with respect to income tax, whereas B point is with respect to GST, guys. Where the registered person has received a refund of more than 1 lakh in the preceding financial year on account of unutilized ITC. So he has claimed a refund of unutilized ITC of more than 1 lakh in 1 year. That is only the last year. For income tax, we need to check last 2 years. In both the years, they should have paid more than 1 lakh, more than 1 lakh income tax. Whereas here, only 1 year, last year. Okay. In case of zero rated supplies made without payment of tax or inverted duty structure. What is it? I will explain. Okay. Just a minute. Yes. So assume my outward supply is zero rated supply. So my output tax would be zero. Okay. I'm exporting without paying GST. Whereas on my inward supply, can I claim ITC? Yes. I'm eligible to claim ITC. But to adjust my ITC, I don't have my output tax. That means, can I claim a refund of this unutilized ITC? Yes. So in the last year, if I have claimed a refund of unutilized ITC of more than 1 lakh in the current year for any month, Rule 86B is not applicable. Okay, sir. Then inverted duty structure. Inverted duty structure means simple, guys. The tax rate on my inward supply is more than the tax rate on my outward supply. For example, assume on my inward supply I am paying tax at 18%, whereas on my outward supply the GST rate is only 5%. So normally input tax would be more than output tax in every month. Yes. So even if I keep on carry forwarding the credit, how long will I carry forward? Every month it will be same story. So in that case, will they give a refund of unutilized ITC? Yes, normally guys, except these two cases. Except these two cases. If I have any unutilized ITC in any month, I will carry forward it to the future period and I will use it. But whereas in the following cases, even if I carry forward to the next period, it is same story in the next period also. So only in the following two cases, whatever unutilized input tax credit is there in the credit ledger can be claimed as a refund by a registered person, guys. Okay. So here we call it as inverted duty structure. So if I have claimed the unutilized ITC of more than 1 lakh in the preceding financial year, in the current year, Rule 86B is not applicable for all 12 months. Even though my monthly taxable supplies is more than 50 lakh, still, if I am covered under any of this point where I have claimed a refund of unutilized ITC of more than 1 lakh in the last year, in the current year, no Rule 86B. Okay, sir. Next, C point. Point is interesting. Cumulative calculation. Okay, pay attention, pay attention. Where the registered person has discharged his liability towards output tax through the electronic cash ledger for an amount which is in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year. So this is the calculation in the current year. I will try to explain it with an example. Please pay attention, guys. Assume we are in August 2025. So we need to check from the beginning of the financial year till the end of last month, what is the output tax? Against output tax, what is the ITC claimed? And what is the remaining amount paid through cash ledger? Okay, so for each of the month, I have given the numbers. So for each month, the amount paid through cash ledger is 2 lakh, 5 lakh, 50,000 and 3 lakh. So cumulatively, total for all April, May, June, July, 4 months put together, cumulative output tax is 90 lakh, cumulative ITC claimed is 79 lakh 50,000. That means the cumulative amount paid through cash ledger is 10 lakh 50,000 for all 4 months put together. So just divide this by 90 lakh. Check how much is paid through cash ledger compared to output tax for all 4 months put together. So 10 lakh 50,000 divided by 90 lakh into 100, which comes to 11.67 percentage. Is it already more than 1%? Yes. So cumulatively from April to July end, already more than 1% of my output tax I have paid through cash ledger. So they are telling in August, even though my taxable supply is more than 50 lakh, still Rule 86B is not applicable. Rule 86B is not applicable for August. So should I check like this for each month? Yes. For example, assume I am checking for December 2025. So I need to check the cumulative figures of output tax as well as how much is paid through cash ledger from April to November 8. Sir, what if I am checking for February? From April to January end, we need to check. Sir, what if it is for April? For April, there is no benefit because there is no preceding month. No. So if it is the first month of the financial year, this benefit is not there, guys, of checking cumulatively. Is that clear? So for April, if taxable outward supply is more than 50 lakh, straight away Rule 86B will be applicable. Got it? Yes. Provided it is not covered under other exceptions. Got it? Yes. It is pertinent to note that GST liability paid under reverse charge mechanism should not be taken into account while calculating the total output tax liability paid through electronic cash ledger. Okay. Sir, whatever I am supposed to pay on my inward supply under RCM, I have to pay it through cash ledger. But that is what? My input tax. So whatever amounts we are taking here, no, paid through cash ledger, should we consider input tax here or only output tax? Only output tax. So on my inward supply, if I am paid input tax under RCM through my cash ledger, should I take here that in that calculation? No, no. How much of my output tax is paid through cash ledger only we need to take here for calculation of that 1%. Is that clear? Yes. Even if you are paid interest, late fee or penalty and all through cash ledger, don't consider that. This is only how much of your output tax is paid through cash ledger, guys. Okay. Then D. where the registered person is government department, public sector undertaking, local authority or statutory body for the following four people, no rule 86b, guys. Rule 86b is not at all applicable. Okay. So this table talks about when credit is available or not. This actually I already covered along with exemption topic. I will quickly repeat it. If my outward supply is zero rated, which includes exports as well as supplies made to SEZ unit or SEZ developer, credit is available, guys. Credit is available on my inward supply. Whereas if my outward supply is nil rated, exempt or non-taxable supply, which is nothing but exempt supply as per section 2 clause 47, on my inward supply, no credit. And what is nil rated, what is exempt, what is non-taxable supply, I've just given an example. You guys can just go through it. Got it? Yes, sir. So this is all about the input tax credit provisions, guys. So come to the section list, which is at the beginning of the revision book. We'll just mark whatever we have covered in this chapter. CGST Act. So we have covered section 16, 17, 18. Even 19, 20, 21 talks about input tax credit, but they are not a part of your syllabus. I'm just marking, but I'm given in the bracket that not covered at intermediate level, guys. Yes. And as per section 20, just a minute, of IGST Act, with respect to ITC, whatever we are learning from time of supply topic, all the provisions are covered in CGST Act. But mutatis mutandis is applicable even under IGST Act as per section 20, guys. As per section 20. And in this chapter, we also learned about zero rated supply. Guys. So hope it is clear for you. If not, please try to watch wherever you want more clarity, or if required, if time permits, do watch this video again, guys, because it is very important topic. Prepare well, guys.